Welcome back to the video. In today's video we're going to be talking about sniper entries and how do they work. I'll be showing you a breakdown on TradingView for this one as well, for you guys to see how I catch my sniper entries and the things that I look for. So let's get started. First thing first guys, read the disclaimer, and once you've read the disclaimer, please continue with the video. Okay, I'm hoping that you guys have read the disclaimer, so let's get started. So sniper entries refers to position. So what I mean by that is your accurate entries, and sniper is like, you know, you've got the right and the perfect entry, and trying to get the best possible price and the most, you know, perfect movement where you can enter, so your drawdown is minimized and your maximum profit potential is, you know, has increased. So there's some things that I like to use in the forex market for achieving this, and I'll be showing you that as well in this video. So for sniper entries guys, this is a chart for GBP JPY. That's, as you can tell, that's GBP, so that's UK, GBP Great Britain, JPY is Japanese. So as you can tell, the market, first thing what we do is we look at the trend and where the trend's going. So as you can see on this particular occasion, the trend is going down, and you know, the trend is basically, as you can tell, is making a series of lower lows, lower highs, and the structure has been broken towards the downside as well, meaning that, you know, we're going down, and we're just market is going down, so we're only looking for sell. So the first thing first is we identified the trend, the market is going down, we have broken a structure here, and you can tell from here, you know, we're making series of lower lows and lower highs again. So let's just say we put a line here for you to analyze that, you know, better in the downtrend. Now we have to look for areas of interest or things that like the support and resistance, whatever you want to call it. So I can see one here. From this was the point that, you know, that we broke all that structure there. So let's just say that we've got this point here. Now we have to wait for until the price gets back to this point. So we're not entering here or anywhere just because we think that, you know, we've missed the thing. So we have to basically be patient and wait for the price to come to us. We don't want to enter where the price wants us to enter. So as you can tell here, I've marked this part here. So basically this is the part that we're looking for. Again, in order to get the best possible time frame, we'll be looking to go on a smaller time frame. So we've identified the trend is downwards. We've identified you know, where we need to enter, so we're being patient, we're not entering anywhere here, and we can get stopped out like this, so we'll lose our capital. So basically we're waiting for the price to come to us, our area of interest. So we can say, you know, this is our area of interest, for instance. Now we have to go on a smaller time frame. So now we are going in a smaller time frame, and as you can tell, the price does come back to us. Now we have to wait for a confirmation. As you can tell here, the price has come back to this particular level that we've marked. There's the line, there's the area of interest that I've marked. Now we have to basically see that whether it's worth entering or not. So if the price comes here at this point and it doesn't stop here and it just goes through here, then we're not entering. If the price comes here and we see rejections like this, so we've got doji candle, we're showing multiple weaknesses, we've got upside down hammer, we've also got an engulfing candle here. So this is the perfect scenario. So I would literally enter on this point here. So I'll be putting a short position down there for you as well. So I would enter here. My stop loss would go above the zone, so we don't want anything bigger than, you know, around 20 pips stop loss. So I would just keep it there, and I'd aim for a 1, 2, 3 or the next structure depending on where we can. So typically I would just aim for around this point here. So that's fair, that's more than enough for me, and I think, you know, that's a fair point that, you know, when we get close to this point or anywhere by it, we can just exit our trade. So I would just aim for somewhere around there, making a 3 or 3.5% return on our investment. Again, this is quite crucial that we wait. So the point of sniper entries is, you know, we find, first thing first, we find the trend. If the trend is going down, then we're going down as well. Secondly, we see the support resistance level or the area of interest level. So in this position we're looking for resistance because we're looking for sells, we're not looking to buy at support level. I've made a video on support resistance in my channel as well for you guys to have a look at to understand it better, so you're more than welcome to do so. If you're enjoying the content I'm providing, please like, comment and subscribe to my YouTube channel for more videos. Thank you. Again, you can go on my channel and go through the videos. They'll be really, they'll be really helpful for you. And for this occasion here, we've entered on this position. We've come on the first, we've analyzed the market on the 1 hour time frame, then we came down to the 15 minutes time frame for our entry. So as you can tell, we've entered on the 15-minute time frame, making that this is a proper sniper entry. We wait for multiple confirmations, we wait for things like the pin bar, we wait for engulfing candles, we wait for an upside down upside down hammer. We've also waited for another confirmation where we've seen weaknesses as well. So all these confluences combined made our probability higher, and we entered based on these. Some people would like to use limit orders, but I don't really like to do limit orders because I don't know what the price is going to do, whether the price is going to stop here or it can just go through here, and if it's a limit order then you can get stopped out. I like to wait and watch my entries, then enter manually. Again, this reduces the noise. This also, you'd have to be worried about your stop loss being here, or waking up to surprises, because we're not here to gamble, we're here to trade. Again, we're being patient, we use proper risk management, so we've got stop loss in place. Worst case scenario, if we entered here, if the price went back to there, then we'd get stopped out there, instead of the price instead of there's been no stop loss and the price just goes there or to the sky and we end up losing money. We're not here to gamble, we're here to trade. Again, we've used the risk management, we've stayed patient, we've stayed we stuck to our rules, and we wait for this entry to come on the smaller time frames, then we entered. So this is a perfect example of how I would enter. And again, for sniper entries, guys, I even use the 5-minute time frame sometimes, but for starters and for more confidence and a better probability wise, I would advise you guys to, in my opinion, use the 15-minute time frame. Wait to see a bit of weakness at your area of interest, and then drop the price from there, and make sure you follow the risk to reward parameters, because in the long run we might end up losing more trades, for instance. So this is the only thing that's going to save us. So make sure you use your stop loss, follow risk to reward parameter, and when your take profit gets hit, just exit the market. Don't just think that because the price has got here, from here we're going to wait for the price to go all the way down there. That's greed, guys. We're not going to be greedy. We have to use proper risk management rules, and we have to use proper take profit rules as well. And once the price hits our take profit level, I would even exit here, as soon as it gets to 1 to 3. Some people will hold it down there, but I've seen that the price gets to somewhere around here and it reverses, ends up hitting my break even. So after around 20 or 25 pip, I put my stop loss to break even as well, meaning that I'm risk free, and I let the trade do its own thing and hit the take profit, or either come back and hit my break even. So it's not going to hit my stop loss, I'm not losing anything, and I've covered myself on that side as well. So this is really important that you guys follow this. I'm hoping that you guys have got the idea. So with sniper entries, you have to identify the trend and everything else on the higher time frames, like the 1 hour or the 4 hour, for instance. Then we have to wait to go on the smaller time frames, wait for the price to get to the time frame, see a confirmation, then enter that trade, put a stop loss, use a proper risk management, and then follow the procedure. And hopefully like this, you will be able to see your huge change in your trading, and you hopefully become profitable as well. So this is my advice for sniper entries, and with this example I've broken it down for you, giving you guys the best probable factor for you guys to enter. Again, nothing's guaranteed, you must do your own due diligence, and basically you follow a proper risk management and take profit rule, and then you just basically stick to the rules, and rinse and repeat what works, drop what doesn't work, and hopefully you'll be profitable. Thank you for watching this video, guys. Please like this video, please subscribe to my channel, and go through more of the videos, because there's tons of information, valuable information out there that's going to help you succeed in trading. So I hope to see you in the next one. Thanks again for watching, and take care for now.